Trust you're benefiting from our weekly forex market analysis and trade forecast and our forex trading education as well. So guys, in this content guys, we shall be sharing with you details on how to practically set up your trading platform, on how to set up your trading, right, and your charts, right. So this particular content will be very useful for those who are just learning how to trade, or who have just learned how to trade and they just installed the MetaTrader 4 on their platform, on their phone, on their device here, and they really don't know how to customize the charts, right, to make it custom so they can start trading. So this content guys will show you how to customize your charts, how to set the candlesticks in the preferred color you want, and how to apply the technical indicators that you will be needing to trade. So in this content guys, to show you how to simply apply a simple technical tool that you use in analyzing the chart and the exact moving average guys that you can be trading with. And I'll also explain a whole lot of parameters in this content, okay, including what the symbols, where the symbols are placed, how to place a trade, stop losses, and all of that. And guys, the peak here is that I'll also be showing you my live trading account and perhaps how you can, after creating an account in your back office, right, your client office, how you can actually add that account, the real account, to your trading platform so you can actually trade your money, okay. And also guys, there are a whole lot of contents, a whole lot of highlights that this content will be sharing you, but let me not waste much of your time. Let's dive into this content guys as we trade forex with Millionaire Logistics. Okay guys, so before we begin here, before we look at the whole, right, the whole things guys, let's just go back or to the reminder. So guys, I'm using my phone here for the purpose of this content because I want to be showing you guys how you can actually trade with your phone. Say you're starting up, you just downloaded MetaTrader 4 on your phone and you don't really know the symbols and how to go about it. So this content will go step by step and actually break them down till we get into the trading properly. So guys, if you like the idea, before we continue guys, kindly hit the subscription button and don't forget to hit the notification bell so you get notified each and every time we drop similar contents. And don't forget guys, we're giving you the whole benefit, right? Forex trading analysis, forex trading education, and right here how to set up your trading, plus a whole lot of benefits. Okay, so here we are guys, this is my live account, the live account. This is $2,000 and about 3 cents on it, and right here you can see it, there's a live account here. So let's say you just created an account here on your back office. So I'm going to do that in a consequent video, maybe fund an account and practically record the steps I took in funding the account. But right here we already have a funded account. So should you want to add another account, right, to your trading, I have about 2 accounts here, including a demo account as well. So here we are. Okay, one account is a live account too, and this is also another account, and right here this is a demo account here. So you can see they are all my personal accounts. Okay, so let's say you want to create a new account. Okay, now this is how it goes. You log into an existing account because I'm under the impression that you just funded with a broker and you want to add that, you know, broker account to your MetaTrader 4 so you can trade. Right now you go to login existing account because you must have created the account in your back end. Creating the account means that you must have gone through the site, maybe a referral link or so, and you've provided your email address. You've also provided a password, and you've also applied for the type of account you want, and perhaps made deposit, and your login details, account ID, and everything has been sent to you. So you log into an existing account, right? And here they say enter company and or server name. So you enter the name of your broker. It could be lightfinance.ecn.com or equity broker SC, depending on the brokerage firm you choose to use, right? Should you be thinking about a reliable and recommended broker, right, to actually use, you can check in the discover brokers that we are using and we have actually tested, and we are still trading with them for different purposes. You can choose anyone and trade with. Okay, so right here what you're supposed to enter is the broker, right, the exact broker that will be provided in your account details, right, that's sent to you in your mail after your account has been successfully created. Now in some brokers, they require you to change the MetaTrader 4 password from your dashboard. right? They may require you to change that before you can actually log in the account here, but some others may not require you to do so. Depending on that bridge, perhaps you can, go around it whichever way. So right here you add the broker. Let's say you want equity, right? Let's see how it comes out. Equity SC. Right now you have a whole lot of equity. Yeah, you have equity securities, demo, equity securities, live 3 server, but the broker will actually specify the particular one you would use. So right here you can see a whole lot of ones here. So you're actually choosing the ones that is very relative to your choice country, right? So depending on the country you register from and all. So because I am trading from Nigeria and I reside in Nigeria, this is the exact one I use, equity brokerage SC live 4. So now when you choose that, guys, now when you choose that, the next thing you're going to be entering is your login and password. Now the password is what you must have created by yourself for your trading platform, right? For your trading, right? That's your unique password. And also the login is also unique. The login is your login ID, your trading ID, and most brokers it comprises of numbers, right? And that's your login, and the password you must have created for yourself. Some brokerage firms like FBS that I've used in the past come with a unique password that you can't change, so you have to have that password offhand, right? In my own case, save password, so whenever you enter it, the password is saved, right? Now after you do that, guys, once you do that, you're gonna have this exactly like I have here. Okay, so right here what you can see here is the balance, the equity is the same because I'm not on any trade and it's a full margin. You see your free margin here is that because I'm not on any trade and all. That's what you have here. So right here, this is what you have, USD, and when you press this plus, it takes you to a trade. But this is actually not where I enter trades from. I'm going to show you how we go about that. Okay, now you see these icons here. You have here quotes, you have here chart, you have here trade, you have here history, and you have settings, guys. Okay, now if you press the quotes, on the left side of the screen here, you can see this icon here is to edit. Right here you see the currency symbols, guys. Now I'm of the assumption that, guys, you must have requested for a free trading manual and trading booklet that we actually give, trading materials that we actually give out for free. So if you've not gotten that, guys, kindly comment with your email address in the comment section and comment that you actually need that from us, and then in the next 24 to 48 hours you actually get 3 free trading materials to start up with, right, in your inbox. Okay, so right here on the left hand side we have the currency symbols. You have Euro USD, you have AUD USD, Pound USD, all the currency symbols, and you have here the different prices, right, the different quote prices, guys, the bid price and the ask price. But this is quite advanced. Let's say it's quite advanced for you guys. Let's go on to where we see the chart. So when you press the second icon here, now this is the chart. So right here, as you can see, you're just seeing a customized chart, or a naked chart most especially, right, with the custom moving average that comes with the whole setting and all that. So we would love to customize this to actually suit what we can understand. Personally, I like the candlesticks to be in red and green. So for red, in my own case, I love the red to symbolize the bearish candle, right? If you don't know what a bear candle is or a bull candle is, well, you can relate to most of our contents, right, where we analyze and we actually explain all those scenarios. But then bear candle shows sellers in the market, while bull candle actually shows buyers in the market. So the bear candle or the sellers is mostly or commonly symbolized with the red bar. Now all these are bars or candlesticks, yeah. So let's say the red candlestick, while the bull candle or the bulls, right, the buyers, right, is symbolized by green candles. Okay, and the green candles, actually you want to see green candles going up to show that, hey, the price is actually going to the upside, right? And when there's bear candles or bearish candles in the market, we want to explain that as, the bears are in the market and the price is actually coming downwards. So we're going to customize these charts, guys, in Jiffy to suit that particular purpose. Okay, so let me explain some parameters here before we do that. All right, now if I screenshot this, I can actually highlight some things. Okay, all right, now here we have here, guys, to be the time frame. Okay, let me change the color. Right, I want to use black. Okay, so we have here, guys, we have here to be right here. We have the time frame, what we call the time frame. We've explained this in the previous content, but time frames actually just shows the area of the scope of the chart that we're looking at, right? The scope and time interval of the chart that we're actually looking at. So on this here, we have the 1 hour time frame, which simply means that each of these candlesticks or bars here represents 1 hour of price action. In further videos, guys, we shall be looking for, we shall be actually be doing much of this magic. We shall be looking at things of this nature. We shall explain this, but let me not bore you guys with the whole detail right here. Okay, so up to this point now, okay, let me make it this way so it's practically okay, quite easy. Okay, so looking at the chart here, we have on the left hand side we have different time frames, and different time frames actually shows different areas of the chart and different scope to actually watch, right? So if we go from the monthly, guys, now Euro USD, there's the symbol as we've earlier identified on the monthly chart. Now this is actually an area of the chart from 2016. On the downside, what you see is time and dates, right? 2016, you can see the area from 2016 that it covered, showing the scope, right, that the screen can actually show, right? And each of this candlestick or bar here represent 1 month of price action. Price action definitely is not a complicated thing. It just shows what price has done within that time frame. Okay, now if we go on the weekly chart, same thing, right? You can see that the time is quite narrowing, it's narrowing down. From here we now have 2018. The previous, remember, we had from 2016. So right here we can capture from 2020, sorry, and down to 2022 to our current year. Okay, now each of these candlesticks here represent 1 week of price action. Okay, now the same thing applies to the daily chart. As you can see, the time is now going down. Right here we have from 25th March 2022 to the current time. Okay, now each of these candlesticks also represents 1 day of price action because we're on the daily chart. Now the same thing happens when you come down to the 4-hour chart, right? 4-hour chart and the 1-hour chart. Okay, so guys, don't forget, one of the highlights in this video is to actually show us how to customize your chart to actually suit your trading purpose. So guys, I'll be showing you my personal trade style. I'll be sharing you my personal, my own style of customizing my charts. And if you actually look at my charts on my phone, it actually look beautiful. But the only thing I won't do for the purpose of this video is I won't actually change the background, because personally I love a black background. Okay, so it's just the background I won't change, but I'm going to customize each and every bar and include the very good moving average that I shall be explaining to you how perfectly it works and exactly how it is, right, and how we can assist you in your trading. So guys, let's do the magic. Okay, now let's go on the right hand side. What you can see on the right hand side is very unique, right? The 3 things that are here, right, the 3 icons here shows the different charting style. Okay, now the different charting styles here. So on the first here we have the bar type of candle, and the second one is a candlestick, which we have, and then the third one is a line graph. So the most popular, guys, and for the purpose of this or in all your trading that's quite easier, is the Japanese candlestick patterns, which is already here, right? While the other is less common, the bar chart, but we won't be using that now. And then here we have our cursor that we have been using, right, called the crosshair, that I can actually use to identify areas of the chart, right, and it shows you with precision the date. It comes down to the date and the time of that particular chart. Okay, now the F sign here is what you can use to add your indicators. We'll be using it here. And then this other one you have here is the symbol, where you can add objects to the chart. We'll also be applying that. but not now. Okay, now this is where you just have the price where it comes up and all. You can actually take it off. Now we go to settings, which is very important. So we press settings. Now this settings here is where we want to customize our charts. Okay, now we have bar chart, candlestick chart, line chart. Now I'm using an iPhone, so the selection here is actually based on iPhone settings, but it's not that different if you're using an Android, right? Now it's already selected on candlesticks. Okay, now for the volumes here, the volumes are on, right? The volumes are just these bars that are here. Personally, I don't use the volumes. Okay, I don't actually use the volumes. All right, so I can actually take this out. Okay, now I use the period separators. I'm going to explain to you how that works. So I'll have the period separators on. Now trade levels shows stop loss areas and take profit areas. If you're not familiar with what stop loss and take levels and take profits are, guys, also comment in the comment box there and ask for the free trading materials, right? Okay, because that will actually take you from beginners level, from novice level to amateur level to intermediate level. Okay, now the most important thing that we want to do here is the colors, right? The open, high, low and close are just price that will be showing on the data window that shows the open of the day or the candlestick that you're highlighting, the highest point that the price has gotten to, the lowest point, and then the close. Okay, so let's see what we have on the colors. This is where the good work is. Okay, so right on the color scheme, that's the background that you see here. You have black and white, which is okay. Now the foreground rather, the foreground will highlight the date that you see that's on the lower side of the screen, and then the numbers, that's the price codes, so the colors that they will have, the font colors and all. So it's, since it has to be black since the background is white. Okay, now the bar up now is the green candle, the candle that will, the one that indicate the bullish candle or buy candle. So like I earlier said, I want that to be represented by a green color, right? So I'm going to change this color here to green. Okay, now when that is done, the bar candle now is the candles that indicate the bears in the market, right? That shows that sellers are in the market, or we actually want to see those candles when the price is falling down. Okay, so I'm going to make it red for the purpose of this. Okay, now the bull candle, guys, now this is where it becomes a little bit technical but not an issue. Okay, now the bull candle, like we said, is the same thing as the green candle or the candle that indicate buyers in the market. So I also want to symbolize it with a green. Okay, now we have the bear candle, just the opposite of the bull candle, the candle that indicate that symbolizes bears in the market. Okay, so we want to also have that as a red. Now for the volumes, because we've actually removed volume, so every other thing here is kind of okay. Now when we go back and we go back to the chart, you can see that there is a little difference right here. Okay, so what we have here now, we have the periods. I'm going to explain how they work, right, still in this content. So let's begin. I'll take this to the daily chart. Okay, you can actually toggle between from indicators to indicators here, and then when you press this, you add your buttons, your objects here, and let me do a little tweak on the indicators. Now this is what I like. Now indicator, we only have the moving average, and guys, the moving average is the only indicator that I add on my phone, on my mobile phone, right? And it actually starts with the 20. I use the moving average, the exponential moving average 20. Exponential is here, so exponential moving average 20 on the weekly chart. And for this purpose, I want to make it black color. You can actually use any color you like, but I just want to see a black color, so you see how it works. Okay, now this is it. Now this is the daily chart, but I apply the exponential moving average, guys, on the weekly chart, the exponential moving average 20. So when it's on the 20, you can see that the market is actually reacting to the downtrend. Okay, now because this is a very much basic content, right, we won't actually be compounding you with the idea of how to take a trade with all this information and all. So is actually not very much important at this point. However, you can refer to our analysis videos to see how we have actually used the moving average to give trade calls, analyze the market, and set entry points in the market. Okay, so the next thing we're going to look at, guys, is how we can customize the chart right here. You can see that it's actually looking quite beautiful. Okay, so the next thing here is what these candles are. All right, now we know that this candle is actually a buy candle, that the market, because we're seeing green candles here, we have the opinion that yes, these were buyers in the market. And when we see red candles, we say, oh, these are sellers in the market trying to bring the price to the downside. Okay, now that's a fair one. All right, now there's something we didn't explain in the video in this content. Okay, and that is the period breakers. Okay, now these are the period breakers, but let me see if I can change the line a bit, so we'll have something that will resonate with what we want to do. Okay, so the period separators, let's see. Okay, so the grid here, I'm going to use a black line, or let me use okay, so let's use a black line for the grid so that we can actually indicate. Okay, it gives us almost the same thing, so black isn't that good. All right, let's use some other color for the grid lines so we can easily tell. Okay, good. So we don't have any grid lines anymore because we used a white grid line, because the grid lines, I don't actually use grid lines on my own chart, but you can actually use if you like. Okay, so what we have here are the period separators. These lines here are the period separators, and for now they actually form a very important part of trading to me, especially when I want to day trade, because I want to know where the market opens at the day and where the market closes. Okay, so I'll explain how this period works from a higher time frame perspective to a lower time frame perspective. Now, if we're looking at the monthly chart, you can see these lines here and here, right? And on the monthly chart, guys, this period here, the period separators actually separates batches, the time between here and here. And from here we can find out, if we investigate, we'll see that from this point here to this point here indicates or shows 1 year of price action, right? So from here we can see this is 1st January 2021 and this is what, 1st January 2022. So within here we should be having 12 months of price action. That's what the period separators do. Okay, now from this point here, January 2022, this period here is 1st January 2023. So when the market actually gets to this point, we must have been entering 1st January 2023. Okay, now when this price actually comes, when you change the time frame to weekly time frame, guys, we'll be getting is the same thing, right? From this point here, right, to this period separator here will actually indicate 1 year of price action. Okay, now when we do that on the daily chart, what do we have? So on the daily chart, it becomes quite cool that from this point of the chart, right, to this point indicates 1 month on the daily chart. So the period separators actually separates 1 month of price action from the next. Okay, so from this point here to this point indicates 1 month of price action. So we want to investigate. Let's see, this is 1st June 2022 and this is 1st July 2022, 1 month. Okay, now when you bring the time frame lower, right, to the 4-hour for the period separator, what you have here is 2 weeks. 2 weeks, 11th July to when? 17th July. So this period here is 2 weeks. Okay, now when you scale down to a 1 hour or less, from a 1 hour, what you have here is 1 day of price action. And then when you scale down to as low as 15 minutes, which is actually a very comfortable time frame for day trading, the same thing is 1 day. 1 day, right? It's 1 day. Okay, from this point here to this point shows 1 day of price action. Okay, now that's all about the period separators. Okay, now one thing I didn't tell you is the moving average. Now I've said this in a previous content. In most of my analysis I do mention it, how I apply the moving average to my chart. Now definitely my analysis within the month starts on the weekly time frame. I want to get a bias of the weekly time frame before I delve down to a lower time frame to trade. Now if you're reading the materials that I will be sending to you via mail or request by commenting, you will actually see how to properly conduct a top-down analysis in one of the content, in one of the materials, and in other ones I think smart money concept and also the basics that we're talking about. Okay, now market structures and all that too, as bonus and all that. Okay, so from the weekly chart I have my moving average here, exponential moving average, to be exponential moving average 20. But when I scale down on my daily chart, guys, I don't use the exponential moving average 20 on the daily chart. It suits my own trading style. Maybe you could have yours, right, which is very much fantastic, which is very beautiful. But for me, from the daily chart, what I actually use is the exponential moving average 100. Now the exponential moving average 100 gives me an approximate area of interest that aligns with the exponential moving average 20 on the weekly chart. And in a particular content, I remember I did share this idea and trading style or analysis style with a couple of guys, a couple of traders who are actually good too as well. And you can actually check that. I think profitable trading strategies with some examples of trades that we took from that, with that premises, and which actually works. It works, it does work. Okay, now so this is this about the about the period separators. Okay, now let's go on to, we've actually explained how to the indicators work and all that. Now let's just try to take a trade, which, guys, this content was recorded over the weekend. Okay, so the weekend and the markets are actually not moving right now, hence we can't take any trade, right? No trades can be executed, but this is how it works. So I'm looking at this market right here and I want to place a trade. So with what the market is doing right now, I want to, I've seen a green candle here, I want to place a trade that I want to buy. Maybe I want to buy. Okay, now what I do, looking at my phone like this, now I've seen the chart. Okay, so after seeing the chart this way, now the next thing I want to do is to trade. I could actually press this, right? When I press this, I come here and accept these terms and conditions, just like we're starting a new account, right? But it doesn't really happen like this all the time. But most likely you can just come to the home screen as it is like this and you see trade, right? Inverted way, you see trade, and then we press the trade and we see all we see here. So beginners, guys, the market is on market execution, but as you advance you can actually use pending orders, either a buy limit, a sell limit, a buy stop, or a sell stop. We've actually explained or used these parameters. We actually explained these parameters in other contents, but I won't actually be doing this on this concept, on this particular content, you know. Okay, so right here what we have is lot sizes, which we shall explain in other contents. But I'm of the assumption that, hey, you're just trying to test this out, so you should be using a demo account. And demo account, you can actually stand the risk of losing funds because you actually don't have any funds to lose. All right, but this is exactly how it is to place a trade, right? From your charts, when you've analyzed the market and you've seen the market, you just press the trade button. For me, once I press that trade button, I press the sell or the buy immediately. Now the sell that is on the left hand side is if you want to sell at the market price. Now by pressing the sell button, you've actually analyzed the market and decided that you're going to sell. And by selling, that means you're expecting the price to fall. And by expecting the price to fall, that means you want to see more of red candles to the downside. Okay, now if that is true, the buy in the market means the opposite, right? Now by pressing a buy on the market, you've analyzed the market and you've made up your mind that you want to buy. So what you're expecting is for the market to actually appreciate in price. That means move higher. And when that happens, that means you're expecting to see more of green candles. Okay, now this is stop loss and take profit. Okay, now because when you look at the chart this way, what you'll be seeing are price. All you're seeing here is price. These are price codes, right? These are price codes. Okay, and these are time. This is the time here and dates and all. All right, so when you sell the market, what the stop loss means is that now I'm entering the market at this price. Now if I'm selling the market, I'm expecting the market to fall, right? But at the same time, I'm not guaranteed, it's not guaranteed that this market must fall. But because I'm trading, I'm taking a risk. I also want to set my risk and my limit. So what I do here is that I then set a price. I then take a price that is higher than, above the current price, and place a price higher. That should this market not fall and decides to actually rise against my analysis, let the market actually close me in small losses, or small loss rather, at the price I predetermine. Now that's a very skillful way of approaching the market. Every trader applies, and every trader abides and uses stop losses. Now, so because the price actually hits your stop loss doesn't make you less of a good trader, but it just shows that you're actually a protective trader. Okay, so that is what stop losses are meant for. So in a sell situation or a sell setup where you're selling the market and you're expecting the market to fall, setting stop losses, your stop loss has to be a price higher than the price you're executing for that market. Okay, you're executing at for that market. All right, so now it's not that complicated. Now the stop loss and everything that is in there, those terminologies, is just for you to impute the price. It's just the price. So in this case, if I'm actually setting a stop loss, say I want to sell this market, I'm setting a stop loss above the price at say 1.01322. Okay, now invariably, if I want to buy the market, where would my stop loss be? Of course my stop loss will be below the price, below the execution price, because what I want is, okay, I'm buying the market, so my take profit, I'm expecting the market to appreciate, to go up. Okay, now if the market doesn't yield, doesn't go up, but still comes down, I want to actually protect myself by what? Allotting a particular risk, right? So I'm setting a stop loss below the market that should this price not go up but come down, let it close me with a little loss at this price to the downside, which is fair enough. Okay, now, and that's good. Okay, so that's that about placing a trade. So those price codes is what you actually put here. Now when you place a trade and you set a stop loss, you can only put one stop loss and one take profit per trade. So the stop loss, remember, for in the sell market, the stop loss has to be a higher price, right? Higher price that is higher than the market price you executed at, right? While in a buy market, the stop loss, guys, is actually below, lower than the price that you entered. Okay, so guys, if you're loving this, if you're actually getting value from this content, guys, don't forget to hit the like button, don't forget to subscribe and get notified. Don't forget to go through our previous content as well. Perhaps as you learn, as you actually get some more value from the materials that we share to you, and as we analyze the market, share our trades and all that, guys, I'm very sure that you actually improve in trading as we trade Forex and Millionaire logistics. Okay, so guys, forgive me, guys, we've actually not been sharing content on the channel in recent times, right? We've actually not been sharing analysis because though we're taking some trades, but we're actually doing more of forward testing. We're testing the markets, testing new strategies, guys, and we're also investing on the channel to make sure that we actually deliver and give you the best, and also other things that are coming up, guys. So we're seeing scenarios where we all could be trading live, or we'll actually also be dropping sharing market insights within the week in live markets, market insights within the week. Say maybe taking day trading sessions and scalping trades, intraday trades within the week, still from my analysis that I'll also be sharing. So guys, you don't want to miss that. All you need to do to stay updated, guys, is to subscribe to the channel, turn on notification bell, And if perhaps this is the first time, guys, that you're coming by our content, or you've been coming by this content but you haven't subscribed to the channel, please do so and be a member of the family, right? Okay, so that's that. Pretty much we've actually covered a whole lot on this, right? So let's do one more thing, guys, about trade sessions. Okay, let's just round up finally with trade sessions, guys. I'm very much happy about discussing trade sessions with you. Okay, now this is what we mean by trade sessions, right? Now the forex market, guys, like we all know, the forex market is actually available, actually open and accessible to everyone to trade 24 hours in 5 working days. From Mondays to Fridays, the market is actually open for trading, right? From Sundays to Fridays. But because of the time frame, the time zone where we are in Nigeria, we actually expect the market to open on Monday morning. Okay, on Monday morning. Okay, so the market is actually um is actually traded in different segments, right, across the world. Okay, and the most popular of them all, we have the Asian session, right, that uses the Tokyo time, right, and we also have the European section or the London section that connotes the UK time, right, and then we have the American section, mostly the New York time, that's North American time. But there are other lights, sessions which are not really that important, or something you should have at the back of your mind, like the Pacific section, the South American section, and all. But mostly we actually focus on these 3 sessions: the Tokyo, in the Asian section, the European section, the London, and then the New York session. Okay, and these sessions are very much important, especially if you're a day trader, because you actually want to trade in the market that has the highest volume, and then the most volatile section, to get the best reward from the market. So guys, on that note, guys, we will be looking at one particular or just 2 bars to actually highlight these different sections. Okay, so permit me, guys, to show you what this does. Look at it. Look at what I pressed. Just this, the object. Now on the Android phone, if you're using an Android phone, you can actually hold here and you see the object appear. But for iPhone, it's just here, right? You have to press it. If the screen is in this manner, it's up here, right? You can actually press it from here and you can bring out anything. So the things here, right here, I have here on speed dial, the very important ones I use: the Fibonacci, that's the vertical line, my rectangular box, the horizontal line, and the arrow. Okay, so right now I want to use the vertical line. So I press this, it appears on the chart, and I just drop it. That's all. That's all. And you can actually edit. So I want to make it black. So I'm going to make it black. Right? That's all. Okay. So this is exactly what I want to do. Now this is 1 day of price action. From here to here, it's 1 day. So I want to divide this chart into trade sessions. That's all for everyone to see. I want to divide into 3 sessions. Okay, different trade sections. Now forget the whole gibberish you hear that whole trading sections are difficult and all that. They're actually not as complex as you think. But then I'll also share you this, and I'll share you my opinion about getting the most optimal time to trade. Okay, now we're looking at 14th of July, right? This is 14th of July, and then this is 15th. So this should be Thursday and this should be Friday. Okay, because of time and to save time and all, we won't be going through like from the beginning. We'll just do with this. All right, now technically, guys, this is what happens. Trading sessions, right, in the market actually opens with the Asian section. Practically opens with the Asian section, right? And the Asian section, guys, runs from 12 a.m. that's 00 to about 9 a.m. Now, guys, you observe something on the chart. Which I'm going to share quite quickly. Okay, now the chart here is around 2 hours. It's 2 hours. The timing on the chart is 2 hours ahead of our time if you're in Nigeria, right? If you're in Nigeria and UK. Now that will be something, it's not really much of an error, but it has to do with the servers, right? It has to do with the servers and where the most brokers get their feed from, because like these feeds are being gotten from server providers, live server providers. So the brokers actually connect to servers that gives us these feeds and these points that we actually use in trading. So to match it with my own time, personally on my desktop, on my PC rather, my time is actually the same time with the chat time, right? While on my own, with common sense, I just apply common sense to know that, hey, when I see 10 a.m. on the chart, it's actually 8 a.m. in real life, and that's what it is. Okay, so whenever I see 0.00, this is where it starts for me, 2 a.m. So you find out that from the beginning here to around, what we'll have here is 11. Okay, so from here, this right here ends the Asian session. Okay, now sorry guys, it may be a little bit rough, but let me add this. Okay, let me use the box. All right, let me use this box. So from the opening of the market, right, up till this very point, up to I think 11 here to here to here, we have here the Asian session. Okay, so this is where the Asian session ends. All right, now I wish I could, okay, maybe I would write if I can, but I can't actually write because I'm using my phone right now. Okay, so we also have another box. Another trading section, guys, is the London session. Okay, now the London section, guys, starts from 8 a.m. and closes by 5 p.m. Nigerian time, guys. Nigerian time, from 8 a.m. to what, to 5 p.m. Okay, now from that way, what we'll be having is this: from 8 a.m. 10, from 8 a.m. from 8 a.m. Okay, so let me just change this a bit. Let me make it quite different. So the London time, I actually use this color. Okay, beautiful. So from 8 a.m. till 5 p.m. Okay, now 5 p.m. here, remember using Roman figures, so 5 p.m. should be around 5 p.m. Nigerian time should be 17, so it should be around 7:19, because we're 2 hours ahead, it will be 19. All right, okay, this is it. So this is the this is the London session. Okay, this is the London session. All right, a London session. Now this can actually make up a very simple strategy for trading for beginners, but you have to test it. Remember, this is the Euro USD, and mostly when we're dealing with time trading with time and all that, our major interest, or beginning point for trading, should be the majors, right? The majors. Okay, so I'll add another box here and let's highlight the New York session. Okay, now the New York session, guys, starts from 1 p.m. Nigerian time. Now this is practical. Okay, 1 p.m. and closes at 12 a.m. all right, now 1 p.m. here, 1 p.m. should be 13, but what we'll be having here is 15, because 15 here is 3, right? Remember, guys, we're 2 hours behind. Nigeria, we're 2 hours behind what the timing of the chart is. I think most times I've traded for quite a long time, so quite some time, yeah. I'm still developing, still new, but come on, for quite some time, yeah. And I've seen most of the brokers have actually seen the same thing, and in few cases, yeah, maybe an hour difference and so on thereabout, but it's just comparing and all, it's just the same. So we're looking at this 13, right? We should be looking at 13. Okay, from here. All right, from here. Okay, from here, let me see if it's on 15. Okay, so this is, we should be having it on this candle. Okay, let me change the color to, okay, I'll change the color to yellow. All right. Okay, to what? To 12 a.m. to the beginning. All right. So this is what we can, let me make the color, I can't see that clearly, so let me make it a bold color. Okay, purple. All right, so this is all for that trading day. So the Tokyo session, that's Asian session, the London session, and the New York session, guys. Okay, now if this is good enough, you can see that practically it covers the whole day of trading. So what this simply means, guys, is that we're trading forex, okay, and as we're trading forex, we're dealing with currencies here, and these currencies here are not alien, right? These currencies are currencies that are used by countries, just the same way the naira is used by in Nigeria. The euro here is used in Europe, and parts of Europe that uses this euro, the euro, majorly we're looking at Germany, we're looking at France, we're looking at, I think, London too, Europe, some way, we're looking at countries that makes use of the euro generally, Belgium, France, Germany. There are countries that actually use euro, the euro currency, right? And then we're looking at the USD. We all know very well that America uses USD as their means of exchange, and the United States dollar is also symbolizes a global means of exchange. Okay, so now these are, when we're looking at the euro and the USD, we're looking at big countries that actually use this currency. So we're comparing, right? That is why we have these currencies in pairs. So when we pair them, we can actually see that, oh, if something is happening in Germany or something is happening in France, kind of the biggest European nations there, definitely want to see how their currencies are being exchanged, right? So strength in those currencies will actually reflect in strength in their countries, in their various countries, in terms of trade, monetary policies, interest rates, goods and all that, services, cost of goods, services, employment, and everything. But let's not go too deep into the fundamentals. Let's just deal with these guys, okay? So now, what do we notice here? What do we notice here? We can notice that these trading sections that were highlighted here, guys, the chart here, we can see from the box here that one didn't necessarily need to end for the other to begin. As a matter of fact, while the one of the trading sections were still open, right? The second one had already started, and then while it hadn't ended, another trading section started, right? So we call this kind of scenario here overlapping. When you come across some kind of terms, I hear, oh, when you want to trade this thing, you should trade in the time where the trading sections overlap. It's not rocket science, guys. It just means that while one trading section is open, another trading section is equally open, and this actually happens for just a short time, and it's mostly very much symbolized by volatile moves, right? At that point, when there's overlap in the trading market sessions and all that, you find very good trading opportunities and quite volatile opportunities. But guys, the best trading sections in summary to trade the forex market are trading sections within the London time, the London session, that's the European section, the London session, and the New York session, right? You find optimal trades at that point. So it's a very simple trading technique and all. So guys, if you must forget anything, you need to have your notepad down and write this: trading sections of the day, right? Trading sessions. You have the Asian trading section, the Tokyo section. If you're in Nigeria, it starts from 12 a.m. to 9 a.m. That starts from 12 a.m. and ends at 9 a.m. While within that time, the London trading section here starts at 8 a.m. and ends by 5 p.m. So between the Tokyo section and the London section, guys, you have an overlap. So when you have this overlap, guys, you have this overlap between the period of 8 a.m. when the London session starts and 9 a.m. when the Tokyo session ends. Okay? Now, you also have another overlap. So you have two overlaps in one day. Now the next overlap you have is the overlap between the London trading session and the New York trading session. Okay, now why is that? Now the New York trading section starts by when? By 1 p.m. Now when the New York trading session starts by 1 p.m, the London trading session is still open. Okay, so from 1 p.m to about 5 p.m when the London trading session ends, that's an overlap, 4-hour trading window, right? And from there you have just the New York session, and the New York session then goes straight and ends at 12 a.m. Then Asian session starts for the next day. Okay, now that's all about trading session and all the gamings, guys. I see this, I actually like the way this looks. Okay, so I'm just going to screenshot it. Okay, and then we're going to write. Okay, going to write. Let me see how it works. If it doesn't work, I'll just leave it. Okay, this is the Tokyo. Okay, Tokyo session. This is the London section, and this is the New York section. All right. Okay, so that's just what it is. So that's just what it is. Okay, all right, so that's all about trading sections, guys. So with this, guys, this can actually tell you when to actually look at the trade. So if I'm to bring this down, let's see how this plays out on a 15 minutes chart. So we see wider areas of the price. Okay, great one. Nice. Now you see how it plays here, guys. See how it plays here. Okay, so let me give you a simple bonus here. Now the market actually trades to this point. I'm looking at an overlap, right? So I want to see the market actually do something very interesting. So now the market opens here. A simple trading strategy. The market opens here at the Tokyo session, right? For swings, I want to actually be looking at the high of the day and the low of the day to actually get the range, right? And now, because we actually want to look at scalping opportunities, intraday trading, we want to pick the session highs and the session lows, right? So this is the highest point on Thursday, being 14th, right? The highest point. And then before the Tokyo session ended, this was actually the lowest point before we had this London session which started here, right? So if I'm to have this area as my range and this area as my range, now I have a trading plan. Okay, so when the London section starts, you can see this is the overlap, and when the London session starts, the market actually got here to this high and was actually making its way to this low. So this is actually the low of the Asian section. So within this market actually showing this rejection in a 15 minutes time frame coming downwards, somehow if this market is high, definitely the market will actually make for this region here. And when the market actually made its way down here, you can see this rejection before it came to the downside. Now when the New York session started, you can see that the London session had actually made its own high and its own low. This is the London session high, and then this is the London session low. Let's say the lowest point before the London section ended, and then the New York section started. So at this point too, you can see that new lows have been forming, and the market is actually going up again within that range. So when the market is actually going up, I can actually take a risk that the market will actually reach for this London session high, which it did at the end of the day before the market actually closed at this point. So showing you certain trade opportunities that can be taken within a day by what? Identifying the trading sections and see how price plays within those areas. But guys, in a future in our next content or in further contents, guys, just tell me what the kind of video you want to see based on this particular explanation. So if there's anything that you don't understand, guys, indicate in the comment box and we shall plan to create contents based on that, right? So we can actually break this down to a simpler and more effective strategy, guys, segment here, in addition to the content on how to customize your chart, and we actually went further to do a setup and all that, for that particular session here, on how to set up your trading chart on the mt4, on how to add some kind of indicators, the basic indicators, and I also shared with you some technical tools, but I didn't go into details as to how to use the Fibonacci retracement tool, yeah, and some other objects here on the chart. So right here, guys, still with the same setup that we had, with the same chart that we customized together, yeah. Okay, so let's just do a little bit of odd USD analysis. Sorry guys, I'll be doing this analysis with my mobile phone, guys. Okay, so just bear with me, and I'll also be applying that Fibonacci tool. However, in my previous analysis and all that, all I just use is the supply and demand zones, areas of interest, point of interest rather, to actually highlight that, to smart money trading concepts and all that. But I'm actually gonna show you here, and we're also gonna highlight some things on high expectations here in the market for the coming week. Okay, so guys, just don't forget to like and comment, and don't forget to share your comments also in the comment section regarding the breakdown for that segment of this content you would like to see. Perhaps if you require more clarity, or if you want some kind of things to be explained and some kind of contents to further buttress these tutorial. Okay, but for this, guys, is actually an analysis, a live analysis that we're just going to test in the market, and you don't have to trade it, guys. You just have to watch and see if it actually play out. Okay, so we're going to be adding something of like the market structure, guys. Okay, so structure wise, guys, you can see from the monthly chart, from the daily chart rather. So I want to be adding the box. Remember from our tutorial we said you can actually use the box tool. Okay, so if you actually use the box tool, you can see first off, this is a kind of cool resistance level. That's actually, resistance level, right? Clearly here the market actually broke this support level, and we expect that the market will actually play to this point, although some persons may see this as a possible entry, that the market actually have come here and reacted further to the downside, and may want to in fact see here as a resistance level, right? Analysis wise, technical analysis, okay, but then this is how I just try to look at the chart. Remember, we're on the daily chart. Okay, so this is what I see here. Now I wouldn't want to just conclude from this point, because we're looking to actually trade the next week, and this is a weekend, so I just want to look at the weekly chart. Right, on the weekly chart, simply here on the weekly chart, let me take this away. Right, here on the weekly chart, guys, this is what I can see from the old USD. Remember, guys, the fundamental aspect, I really don't want to look at the fundamental aspect right here, but on the overall, guys, we're still very much bearish on the old USD, because the USD remains strong as opposed to other commodities and all. Okay, so the USD is fundamentally strong, right? So every other currency is expected to, every other currency pairs, most major currency pairs, yeah, are falling with respect to the USD when paired against the USD, however. Okay, so right here, this is just what the few things that I can say here. This market has actually been falling to the downside after this corrective move. Okay, we we highlighted here a very big supply zone at this area of the market, and we also saw a very big supply zone too at this area of the market. I think I almost shared the analysis of this, but the analysis wasn't that clear enough, so I couldn't share on YouTube. But this trade is actually a trade I took somehow. Okay, so what we see here on the weekly chart, okay, this trade was a long time, yeah, straight, cool one. What we see here was that the market structure, if we're to break this into fractals, the market has actually broken this support level right here on the weekly chart. If we want to actually range this is what we have on the big range here. This is actually a range, and this is also a range. This level here, I don't know, let me draw, okay, let me screenshot it, okay, to see the what I'll have. Okay, this is what I want to highlight here. Okay, this right here, and this and this and this area, just the lowest point right here is a range, right? And what we can see here is that this is what is holding, because this previous one here has been broken. This previous one, you know, this candle broke the range. Okay, now when this kind of thing happened, guys, this is what we expect. When this kind of scenario presents itself, we then find out that the market that actually broke the range, that actually broke the structure, becomes the key candle, right? The range, the new range between here, the high here. Sorry, I'm not getting it properly. That's because I'm using my phone. I'm sorry. Okay, so we actually have a new range here, which is this new candle, right? We actually have a new range. So what is expected is that between this range to this range, that's where we find continuity to the downside. That means within this candle bar here, we actually should get a continuation entry. But regardless, that's what we'll be expecting in the market. Okay, so I'm just gonna delete this. All right, so we go on to the main chart. All right, okay, so what do we do now to get the optimal trade entry? If we're to look at it, let's do a very simple thing: the Fibonacci. Now, very key things to note about the Fibonacci tool. Still here, just watch on the object. You can actually bring out the Fibonacci tool. Okay, now when you bring out the Fibonacci tool, remember this is the range we highlighted for swing trading. Okay, this range, the highest, right, the high, and the low of the candle. Now let's see what happens. Okay, the low of the candle. Now when we place this like this, remember the Fibonacci, you have numbers here. Like I said in another content, guys, I'm going to break down what the Fibonacci is and the ways I try to apply the Fibonacci. Okay, you have very sensitive numbers here. There are other levels here that just aren't the levels I was expecting. So these levels, the market actually respect these levels too, but I didn't actually add them. That's the average fair price, that's the 50 level, right, and also the 38 level, right? But right here, what we have here is the 100 level, right, the 79, 61.8, and the 0. Okay, for the deepest level of retracement level, we should expect a retracement around 79. But if the price should actually break and close above the 100 and continue to the upside, then we can say that the market has actually changed trend. And when that kind of scenario happens on the field level, the price could actually come down to 79 and continue to the upside. Or most times we just have to say that the trade is very much invalid. You know, the setup rather is very much invalid. Okay, so at this point here, if you look at what happened on the chart, right, zoom in, you can see how the market actually respected the 61.8 feed level. Right, now what happened? Let's investigate. Remember, this is June 26th of June, right? That's when the week started, so we should be expecting some moves around there. Okay, so let's go on to the daily chart or the 4 hour. Okay, okay, so 26th of June, yeah. Okay, so somewhere around here, the market started at the 26th of June. Okay, okay, 27. Okay, so you can see right here that this is how the market actually played out. This is where we put it. So we want to look at the next week on how the market played out. So forgive me, guys, I'll be going back to this right here so we can highlight this area. Okay, so this is where we want to properly highlight, right? And where did that start? On the 3rd of July. Okay, so on the 3rd of July, Okay, 3rd of July. The week started here 4th of July, right? Now, this is where we don't want to take the trade. This is the Monday where I explained to a couple of guys, okay, so this is the Monday. We're not taking a trade here, right? And the market, we're actually looking for an entry to sell. So we're all just focusing on shorting the market, okay? Now, what happens right here? The market actually on Monday, right? You can see on Monday, and the market Monday by 12 p.m., right? And 12 p.m. should be around the London, New York section. Remember, the London section starts by when? The London section starts by 8 a.m. in the morning and closes by 5 p.m. in the morning. So this is around 10, which is kind of the London, right? And you can see right here that if we're to use an optimal trade entry with time, right, we actually should be looking at entering the market somewhere around here. Overlap, which is quite okay. By 1 p.m. the New York market opens, so somewhere around here you can see that this is Monday, right? A Monday, and we want to use the opening right now. If you go around here, you can see that around here where the market gets to the 61 point fib level and has actually shown this kind of retracement, this kind of hanging man. This is a hanging man on the 4 hour, and the market actually comes downwards but reaches this level again. You can see that there is multiple rejection here, and then we can actually plot this trade at this level, which is quite cool, being that the London section is still active. So we can actually take a trade here and set our stop loss somewhere around here. The 61 level is okay to actually risk with our stop loss above the 79, right? And then we get this move here. Now when the market actually does what it does, right, what we can see here is that that the market actually came back to around the 50. The next day went up, not this high again, forming a lower low, right, around the 50, and the market actually reacted, right, and broke this particular structure, forming a new what? A new range. So if it had broken this particular structure, safe to say that we can have our fib level adjusted from this level right here to the low, and we'll still plot somewhere around here. Let's try it, okay? I think I just came by this now, but it's a cool stuff. Let's try it. I'm going to explain when I'm in under content, guys. Should you guys want to see it, you can actually make your comment in the comment section. Should you want me to explain why I'm actually placing it this way, okay? Now you have here, right, and you have the low of where? The low of you have the lowest low. So if from this point here, this is a new day, this is 11th of July that we actually saw this market, and this is the highest point here. And if we actually track the market, you can see that this is 16, right? This should be about the New York section low. So we're talking about section highs and section lows here. So when the market actually, you see the low here, and the market actually still respected what the 61.8 fib level around here. You can see multiple rejections here. So if perhaps one had entered a trade here and with the stop loss here, we would still have seen this kind of move to the downside, okay? And now the price is kind of here, all USD around this level. So what could possibly happen, okay? Now, this price can actually make a shift to the downside, which is very much fair. That the price is still where? The price is still bearish. Okay, so what do I expect from this move right here? Okay, now we've had some form of concessions here. We've had some form of considerations in this price, and we've actually set some levels that are significant. And personally, I'm expecting the price rejection around this higher time frame level around here. So maybe Monday makes a high, right, the highest high, and comes to this area. Now conventionally, guys, this is an area I would consider as a supply zone, so I'll actually mark this place as an area of interest right here, and somewhere around here too as an area of interest. However, this is the premise I want to form. I don't know the fundamentals I'll be coming in on Tuesday. I've actually not checked because I'm still in the day trading kind of mood. Yeah, day trading kind of environment. However, guys, this is what caught my interest while looking at this chart just on my phone after I made the first content, right? The first idea I wanted to share, right, with you guys. This is what caught my attention, okay? Now, looking at how these candles have been placing, right, on the weekly time frame, a structure here was broken, okay? So we have a new range here and here, right? And this almost got broken, but the price actually rejected. So this structure here, this range here, is still valid, okay? It's still valid. Hence, we can actually have our fib level drawn from this point here to this point, okay? From this point here to this point, right? Now, if that's true, we've seen price react at this level, right? Now we can see price go back up into this level, or the 50 level is still here. Price could actually come here, react to this downside, or at this 79 level. Okay, so the focus here is that the overall sentiment of the odd USD, guys, is bearish, but by Tuesday would actually determine if we see some form of moves, if we see some form of rejections, some form of sentiments or price action conditions that gives us very strong reason to sell at the Tuesday high of the day. We can actually take a risk to short the odd USD market. But guys, you don't have to actually take this trade. This is not a trade call. This is not a signal or an analysis like we always do, guys. We just want to, we are forward testing the market, right? We are forward testing based on this, and trading sections, and the trade is going to be taken live. That will be on Tuesday or Wednesday, most likely Tuesday or Wednesday, when the market actually presents such opportunities. And guys, don't forget, we're also testing day trading strategies, guys, and by the time we're done, which we're almost done here, we're going to be actively sharing all that with you on the channel. So guys, once again, if you're not subscribed